Hello everyone, this is Mattis from LATOKEN, and today we're going to be talking about stablecoins. Now everyone knows cryptocurrencies are highly volatile, and while that might be perfect for trading purposes, we eventually need a way out of that volatility. Now moving into fiat currency is certainly an option, but it is an option that is time consuming and it takes you out of the crypto environment. Here's precisely where stablecoins show up. Stablecoins are cryptocurrencies linked to real-world assets such as the US dollar, the euro, or the yen, or they can also be pegged to commodities such as gold. In other words, they are cryptocurrencies able to provide price stability. Now, there are a lot of questions about stablecoins. Should they be regulated? Are they able to keep parity with the respective underlying assets? To learn more about these issues, we've reached out to Gemini Dollar, and we've spoken with Sarah Olsen. She is Head of Business Development there, and she explains us why Gemini Dollar seems to be a different kind of a stablecoin.
A lot of people think that stable coins, whether or not they're backed by physical assets or some kind of algorithm, are going to upset the traditional cryptocurrency market. And what I think is so cool about them is they're so unique in terms of and distinct from one another in terms of what their value proposition is. Stable coins are really just creating a sort of a stable value that's pegged to something else on the blockchain. And so really what stable coins enable you to do is to essentially bridge sort of the more traditional markets and the more traditional economy, with this decentralized economy. For Gemini, the most important part of our asset for our stablecoin is transparency and regulation. Gemini itself is a trust company. We're regulated by the Department of Financial Services. They also regulate our stablecoin, so they approved our asset and have oversight around the issuance. But we're also providing transparency in terms of our banking relationships where stablecoins are held. So all fiat dollars that are backing the Gemini dollars are held with State Street Bank. We provide financial audit attestations on a monthly basis from a well-known auditing firm. We use BPM. And then we also provided our smart contract audit attestation report publicly, which was done by Trail of Bits. And all of these components are really, really important in terms of underwriting risk when using a stablecoin to ensure that the value that you're seeing on the blockchain is actually backed by value that exists in the real world. The problem is if you're trading with an unregulated stablecoin, you run the risk that potentially that business that issues it could go out of business, or they could be banking with a really untrustworthy bank, that has a highly levered balance sheet, or doesn't have proper regulation. So you may think that you have say that you have $1 million of some stablecoin, but it's unregulated. You may not actually have that $1 million of value, because if that business, it becomes insolvent, or gets an enforcement action, you may not have a way of getting, that $1 million of fiat out when you really need it. I think one of the most interesting use cases for stablecoins, in my opinion, is in decentralized applications. I think for, when we start to see insurance contracts written on, certain protocols like the Ethereum blockchain, start to get sort of more adoption, you're not going to necessarily want an insurance policy to be paid out in Ether when it experiences a lot of volatility, as it probably should, because again, it's more of a pro rata piece of the network as a whole. But what stablecoins enable you to do is to essentially create a dollar value, within this decentralized economy.
All right, everyone, that's all for today. Thanks for watching, and hope to see you next week with a new interview. Bye.